Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to talk about another great dividend company that has been giving great dividends for the past 12 years without a reduction, as well as this company, this stock is 51% undervalued. So if that's something you're interested, you want to check this out. Hope you enjoyed the video. If you are new to the channel, just wanted to say aloha. Thank you so much for checking out this video. Hopefully at the end of this video you find all the information relevant and you'll hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on these type of videos. I want you to join my little community of Ohana of investors as we invest in great companies to make that dividend money. With that said, let's take a look at this company. So this company is Prudential. Ticker symbol is PRU. It is a company that engages in the provisions of financial products and services, including life insurance and mutual funds. So a lot of you probably know this company. A lot of you probably use this company. If you're new to this company, definitely go to their website, take a good look, get familiarized with it. Now let's take a look at Simply Safe Dividend. Based on their dividend safety scores, they rated as 75, which is safe. The dividend yield is 4.06. Market cap is about 44 billion. That's considered a large cap. Now let's take a look at some of the key metrics. You can see payout ratio is about 31, which is low for insurances. Forward payout ratio is about 40%. Now they did do a cut during the recession on the 07 and 09. However, for the dividend growth, if you look at it, the last 10 years 14%, which is very fast. Last 5 years pretty good, 13%, which is also very fast. The latest is 4%, which is slow. If you look at it from 2009 all the way down to 2020, you can see an upward trend, which is a great sign. Again, looking back at it, uninterrupted dividend streak of 12 years increases and uninterrupted, which is pretty solid. Now your payout details would be on, you get paid quarterly. The months of March, June, September, and December with the annual payout of $4.80. Ex-dividend date is February 14, which is 7 days away. Then you get your payout date on March 11. Now looking down to the valuation, you can see the stock may be reasonable value today. Now moving down further to some of the important ones, you could see 52-week range is in the high. Sector PE ratio, the Prudential stuff, financial is about 13. You can see the payout ratio is about here. And then the dividend yield currently is right here, which is the 5-year average. Now moving along to the financials, you can see a little bit more. I always like to look at the return on investment capital. So you can see 8% is the good one. So you can see it's about 9%. Return on equity is about 12%, 10% above the preference. Now if we go over to tip ranks at the time of this video, it is at 118. Their analysis rating is about 8 holds and 2 sells. They have a price target of 113 with the 4% upside. 12-month forecast rated as a high of 131, the average of 113, and the low of 93. Now if we swing it over to Webull, based on their analysis, 17 of them also recommend a hold, 76 say it's a hold, 5% it's a buy. Strong buy is about 5% as well. Now if you look at the price target, the high would be 131, the average of 116, and the low of 93. Now let's compare that to CNN Business based on their start price forecast. Again, kind of similar with the high 131, the median 114, and the low of 93. Their analysis recommendations is pretty similar to everybody else with the hold of 13, 2 buys and 1 outperform, and then there's some sell. Now if we swing over to Yahoo Finance, now if you are wanting to learn more about some of these stocks that you are interested in, check out Yahoo Finance. It's free. Just plug in the ticker symbol and you'll get all of these information. But if you look at the year to date, you can see based on the graph, it's going in an upward trend. Now if we go to the 5 years, you can see on March 1st it was that big dip, but after that it's been going up, so that's always a good sign. If you look at it, let's see, P/E ratio is about 6, and then you look at the performance outlook, you can see it's bullish. Going down to some of the earnings, you can see 4 beats in a row. Then you got one on May 3rd, which was the Q4. Looking at the financials, you can see the revenue has been great as well as the earnings. 2021 revenue is about 62 billion and your earnings is about 7 billion. Going down further, you can see mixture of under holds, buys, and strong buys. They have a rating of a hold, which is pretty similar to some of the ones that we just looked at. Currently it's a little bit higher than the average, so you can see the average of 116 and currently it's about 118. Now so we swing over to BarChart. Based on their price target, 131 would be the high, 113 is the low, and then 93 is the low, and the mean is 113. Sorry. Analysis rating is currently a hold, so you can see 3 months has been a hold based on 10. Looking down, you can see there's a just pretty much between a moderate sell, strong sell, and a hold. Yeah. Now if we go through a little bit more in Prudentials, you can see BarChart. You can see the snapshot opinion. So their opinion based on BarChart, you can see it's 80% buy, 88% buy last week, 100% buy. So their current direction is the top one. So based on their BarChart opinion, you can see it's a pretty much buy from all down. So you can see how everything is long-term indicators. It's a buy. So now if we swing to simply Wall Street, based on their evaluation, share price versus fair value, you can see it based on their calculations. Their fair value is at 241, which currently at the time of this video is 118. So they believe this is a 51% undervalued stock. Now if we swing to some of the overview, 6-star dividend payer and undervalued, you can see some of the risk analysis. But I'll let you continue doing your own research. Again, this is not financial advice. Now if we swing by to Robinhood, looking at some of their analysis, you can see pretty much the same. It's a hold, 72%, there's 11% buy, and then 16% sell. Now looking at their research report, their fair value rates it at the $90. Now let's look at a little bit of their performance. So at the time of this video, it's at 118. For the week, it's up 8%. For the month, it's up 4%. 3 months, it's up 4%. For the year, it's up 41%. And in 5 years, it's up 12%. So I did buy this a while back and I did sell it. So if you go down to my history, you can see based on March 11, I got a dividend of $5 in it. So I had about 5 shares back then and I sold it. I bought it at about $90, I believe. So I'm pretty much going to start to get back into it, reinvest in this company. I do like this company a lot. I think it has potential. I'll wait, again, like always, I'll wait for a dip and start nibbling here and there. But definitely, if you're looking for a company, definitely check this out. Also, if you're on Instagram, definitely check me out, Mr. Dividend Investor. I post a lot of stuff in there as well. With that said, thank you so much for watching, guys. There are other videos too if you're interested in other dividend companies, so definitely check out some of the videos. As always, please remember that this is not financial advice. Stay cool, keep investing, and I will definitely catch you guys on the next video. All right, take care. Aloha.